Hi everyone, today let's talk about inflation as well as the economic data, then we'll get into the charts, then we'll take a look at my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at inflation here, you can see the black line is current inflation. The blue line was the previous iteration going back to the 1970s. And you can see we're following a very similar trajectory, but based on what happened previously, that next wave of inflation would come sometime in 2027 or 2028. Now, I don't necessarily think that that's going to happen, but that is what happened at the previous iteration, and it is something that we should be aware of. They said there were a bunch of factors that attributed to this, including OPEC and the oil embargoes at the time, and that we should generally be aware that there is a potential for a second wave in the years to come. Speaking of inflation, we have Eurozone CPI, came in at expectations, 5.5% for core. Headline month over month was minus 0.1%, which is great. That was the forecast. And then headline here at 5.3, still not awesome, but definitely better than the previous read. Moving over to max pain for today, you can see we finished at 436, $1 above 435, which was max pain. This is why it's super important to watch things like this. We've been watching it all week and we finished basically right on top of it. And you can see that here, 435 to 436, right in this zone, right at the lows between these two peaks. Makes perfect sense. Moving over to the charts, starting off with the S&Ps on the hour and the daily, you can see this move down in the pre-market, rallied into the open, basically held at that level, just above 435.88, just below that longer term trend line. Definitely interesting. This could absolutely sell off on the Monday, but you have a key level here that might hold. And you can see on the daily chart, we've been selling off for a long time now. We're getting into a zone that makes sense. We have that highly traded zone here, 436.50. You have longer term trend support sitting down here at 431. Got very close to that on that morning dip. Momentum is still bearish and volume is interesting, but shorter term momentum slightly bullish. We got above some of the shorter term EMAs, and it does look interesting going into Monday, a little bit more so than it has recently. Moving over to the NASDAQ, very similar thesis, dipped in the morning, rallied into the mid-session, hit these trend lines and paused, did get above 357.54, so key level there to watch, above the shorter term EMAs, basically the same setup as the SPY. Moving over to the Russell and the Dow, both of them fell into the open, both of them hit that level and rallied, held at the 9 EMA on the Russell. This move in the morning session, if you go down to the shorter time frames, was actually quite aggressive and it looked pretty good. A little bit of impulse there, and I would expect a little bit of follow through on that one. Looked better than the other ETFs. And then looking at the Dow, similar thesis, hit that level, bounce to the next one. It's selling off a little bit more after hours than the others. Fairly interesting. Momentum, basically the same, ticking towards bullish, coming out of overbought conditions. And like I said, looks a little bit more interesting now than it did here on this previous fall. Moving over to Apple and Tesla. Apple fell, rallied into the day, slightly bullish candle. Tesla gapped down and held, hit that next level at 214, held that level, rallied a little bit. Momentum still bearish here on Tesla. Apple ticking towards bullish a little bit more, both in the vicinity of that 144 EMA on the daily charts. Moving over to the 50 and 200 day averages, 200 showed some bullishness, interesting, a little bit of momentum coming off of oversold. 50-day average got a doji at a very low level after hitting 32.22. As you can see here, this is an interesting level. Last time we paused here, we had a substantial rally from there, so definitely interesting. Still super oversold on the 50-day average, but there are some signs of life going into the Monday session. Moving over to the 10-year and the 2-year yields, you can see the 10-year showed a little bit of bearishness off of that wick rejection at that 430 level. Doesn't mean that this is going to pull back dramatically, and I still don't think that that's going to happen. I do think yields will probably go higher, but it did show a little bit of weakness today, pulling back just slightly. Fairly interesting. You can also see that there's a little bit of divergence here between this peak and the most recent peak. Current RSI high was 68, and we did get all the way up to 69.30 at this previous peak. Doesn't mean a whole lot on yields, but fairly interesting. Moving over to the dollar on the 4-hour and the daily, still chopping at this level. We've been consolidating here for about 3 days. You can see 2 dojis in a row after moving into this zone. Momentum fading, RSI still up here, not showing bearishness yet. 4-hour RSI got below the SMA, starting to break down a little bit, bearish momentum. If this breaks this structure, that could be quite bearish, and that might give equities a little bit more room to the upside. Moving over to the MOVE Index and the VIX, you can see MOVE Index went sideways on the day, nothing doing. VIX, on the other hand, threw a big wick up to that 200, hit my 1850 level like we talked about, and then rejected pretty strongly from there. Definitely interesting. Makes sense that we saw a little bit of bullishness coming off of that level. Momentum and RSI are still bullish, but we might see a little bit of a follow through, start to make a little bit of a choppy trend here, indicating a little bit of shorter term pullbacks, but overall still looking at a bearish trend for equities. Moving over to my accounts, you can see I did jump on that bullish trend. I sold a put for today on the IWM, which was a profitable one. I also sold a 183 earlier in this session, which was profitable as well. I ended up deciding to roll up to 184 on the Russell. We'll see how that plays out. It's in a slight loser right now, but you can see we're still about 70 cents above that, and this is just for Monday, and I got a 46-cent credit on that. Definitely interesting, nice little profit there, $85 or so on that account. And then on the Qs, this worked out great. I sold those calls, rolled them down, and then rolled them back out in time at 353. I still have $2.22 credit on both of those calls. Have a little bit of profit there already, but looking to get a little bit more profit on Monday. We'll see how this plays out. If we break down massively on Monday, I'll probably change this position. Not trying to get super bullish, but we've had a pretty big breakdown over the last couple of weeks. It does make sense that we're going to see at least a little bit of a retrace. I also ended up selling some 356 puts, which are in a slight loser here as well. We'll see how those play out. And I also have some 364 calls to help balance out that position. So neutral on those put and calls, and then I have the bullish covered call here going into Monday. Overall, we saw a little bit of bullishness, and I do expect to see a little bit of follow through on Monday, but I'm definitely going to be careful based on what we've seen over the last 2 weeks. Let me know down in the comment section if you think we're going to get a second wave of inflation or what you thought of the markets this week. It was a pretty brutal sell-off. If you weren't protecting yourself or getting out of your positions, that was definitely rough. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.